Welcome, everybody. Thanks for joining. My name is Vinky Loomba. I'm your host for today's meetup. I'm a founder and CEO of Loomba Investment Group. I'm in the commercial real estate investing space with special focus on multifamily investing. I love to help and educate people on real estate investing and passive income, or some of you might call it mailbox money. I host meetups every other week on Fridays and bring some interesting topics on real estate, multifamily investing, and syndications with some great guests who are the SMEs or subject matter experts. I'm always seeking investor partners and looking to connect with people and build relationships. So please feel free to reach out and connect via social media, LinkedIn, Facebook. I'm all over the social media. And you can also go to my website, loombainvest.com, and you are welcome to download my free ebook, 7 Reasons Why Syndication Build Long-Term Wealth. So before we get started today, I have a small little disclaimer. This presentation is strictly for educational purposes and should not be considered as a legal, accounting, or investment advice. This presentation does not represent any offer to sell or a solicitation of an offer to purchase an investment or security. So the strategies mentioned in this presentation may not be applicable for everyone. So please consult your attorneys, financial advisors, CPAs for any legal matters, investments, or any specific tax situations. And once again, this webinar is strictly for educational purposes only and nothing more, nothing less. And today, our special guest is Gary Lipsky. He's gonna be taking us through a journey that he has a full cycle of his deal for the Phoenix deal. And a little bit about Gary Lipsky. He's a multifamily syndicator with $65 million asset under management. He's the president of Break of Day Capital, whose mission is to positively impact the lives of their investors and communities in which they invest through the highest level of transparency and fiduciary responsibility. Gary is the host of Real Estate Asset Management Podcast, where he speaks with various experts in real estate industry to help educate asset managers. Gary also is the best-selling author of Best in Class and founder of Asset Management Summit. So let's welcome Gary. So Gary,
thanks for having me.
Yeah, we are so excited to have you with us. So stage is
All right.
all yours. You have the sharing session.
All right, I'll share my screen. Okay, you guys see it?
Yes.
All right, and a little disclaimer, we'll go full cycle on this deal. It'll close at the end of September. It's not 100% full cycle yet. All their money went hard, almost $1 million of hard money. But I thought this one is a little bit more interesting than our other deal that went full cycle about 2 months ago. That was only 42 units, and there was that one was a lot smoother. This one we had some bumps and bruises along the way, so this is felt more interesting. All right, so yeah, Vinky covered pretty much my whole background. Been a lifelong entrepreneur for pretty much my whole life. So been running operations and management for 30 plus years. And so that kind of lent itself to my secret sauce, which is asset management. I knew how to run businesses. And when I got into real estate, I used that skill set, my strength, to help further me along. And for anyone starting out in real estate, figure out what you're really good at and just apply that, and then partner with the people that may have a skill set that would be complementary to yours. Not having the same skill set, having some different skill sets. yeah, there's my book and my podcast that comes out every Friday. So if you want to learn more about asset management, check out the podcast. It's only 10-15 minutes long, really short, straight to the point. No fluff. So check that out. And then throughout this, presentation, like jump in anytime, ask questions. This is, for us to, back and forth. So don't wait to the end to ask a question. Feel free to unmute, ask away. We're here to have a conversation. All right, so this property we bought in November 2019. And this is very common with most of the properties I bought. We were basically the first ones to see it. One of the partners that we did a prior deal with got the information on this property. It hadn't gone live yet, and he had a full-time job. He was busy. He sent it to us, and we underwrote it that day and looked at it the very next morning. We literally drove out from LA to Phoenix like 4 or 5 a.m. and was there at 9 a.m. We looked at the property and wanted to make an offer right away because it worked in our underwriting. And as you know, deals go fast. I mean, this was even 2 years ago. Now deals go, in these crazy bidding wars. We wanted to take it down before it went to market and people bid up on it. So this was the look of the property, and obviously just looking at that, we knew, okay, opportunity, ugly sign, overgrown landscaping and whatnot. But yeah, I'll get into that. So here, professional picture. So this makes it look, nicer than it is. When you're looking at the cars and the sky and everything, it's, looks really nice. But this was the property, very dense property, not much grass, not much parking. It's in the path of progress. It's a C class, not too just north of the Sky Harbor Airport, the Phoenix Airport, not too far from Arcadia, which is near Tempe and Scottsdale, but definitely more a rougher street, if you will. Down the street, there's some B class properties, and we knew that this area will continue to improve. As the hold went on. Obviously, you're looking at the interiors, not too bad, but obviously needed updating. Okay, so this was the opportunity. We knew the branding. It was named La Casa, so it's geared toward one demographic. It had a lack of amenities. It's in a growing submarket. Lack of rent increases, and the property management. We were friendly with them, but they're geared towards more smaller properties, not 128 units. So they had a lack of infrastructure. There was a lot of stuff to clean up when we took it over. And, when we knew that going in, and that just tells us, there's opportunity, not just on the rent side, but on the operational side. So our business plan, we fix the interior upgrades, deferred maintenance, increase other income, upgrade the leasing office, improve the roadside landscaping and signage, increase rents at Rubs, hire a professional third-party property management company, reduce the expenses where we could. And so these were the average rents pre-renovation and our renovation budget. And our renovation budget ended up being pretty spot on. One thing we did end up doing is a full paint job, which cost more than twice the amount that we allocated. But we did have some savings elsewhere and HVAC replacement. We never really dug into that, very little. Whenever we underwrite, we always have a nice buffer in HVAC and roof. Even if it just got a new roof, always good to put some buffer in there. At the end of the day, having an extra 100,000 in there this was a $15 million deal, doesn't really move your numbers, doesn't change the IRR or the cash on cash really, but it gives you margin for error because you don't know when COVID's going to hit or Texas freeze is going to hit. So have buffer. And when you have these bigger properties, it allows you to have some buffer. And we were able, we didn't spend all of our money on interior rehab, so we were able to go for the paint job. We felt, you know, we weren't getting the rents that we wanted to get, wanted to improve the look of the property, so we were able to pivot and do that. Hey, any questions so far? All right, I'll continue, but if you have something, like, feel free to jump in and we'll go from there.
I have a question for you, Gary. I just
Okay.
wanted to ask about the business plan. So if you go back to the slide, so most of the time, is it kind of the similar business plan that everybody has for most of the multifamily apartment units that we are buying? So is there something that you would indicate over here that could, you know, differentiate from others? So that could bring you better returns?
Yeah, that's a really good question, because yes, this is, you know, this is nothing new that anyone else is doing. Maybe we find some income streams that someone else isn't doing. This is a C-class property, so we're not going to have like the valet trash. It already had covered parking, and we couldn't charge for that because there just wasn't enough parking spots. So what we could do is you charge for reserve parking, but really it's on the asset management side of holding the team accountable, making them feel that they're a part of it and they have ownership in the property. And so we're getting a lot more mileage out of them. We're able, you know, this property we took over in November 2019, and then a few months later COVID hit. So we still had a lot of tenants in there that we didn't want in there, quite honestly, that maybe caused some trouble, or you know, they were stuffed in there before we took over, and they really couldn't afford the rents. So we had to manage through that process. And I mean, not until just now they overturned the eviction moratorium. So we were getting some people out. You know, Arizona is more of a landlord-friendly state, unlike California. So people that were causing problems, we were able to get out. But still, there was definitely people in there that were taking advantage of it, and we had to manage through that. And so that was more of a differentiator for us than a genius business plan. You know, making sure all the marketing was spot on. And I think a lot of properties lack that. You know, the email that goes out is not detailed enough from your leasing agent. Their response time is not good enough. So how do you improve that is you secret shop your property. And we do that on a regular basis. So we'll try all the different mediums. We'll call them, we'll email them, we'll go through a website, all these different ways, and we'll grade them on how they did. And we've never gotten a perfect score. So what we try to do is educate them and say, this is how we'd like to do it. You know, make sure, you know, we'll always ask specific questions. Like, you know, we have a dog, and so we'll ask about pet rent. We want to make sure that they're answering, not just giving a standard response. We want to make sure they're answering the questions that we give them, and making sure they respond in a timely fashion. And you'll be surprised how often that doesn't happen, quite honestly. And that person will find a new place to rent really quickly. So your team needs to be on their game as far as you know, when someone inquires about an apartment. You know, making sure we have up-to-date pictures for all of that, making sure pictures are included on emails. There's a lot of little things that you can do to help increase occupancy and minimize turnover. And those are the things that really separate yourself. You know, business plans are typically going to be your standard business plans. All right. So here are some of our wins and challenges. There was a new charter school that got built right down the street. We were excited. This B-class property got sold for $173,000 a unit, which is just below our exit price for this property when we wrote it. Our deal now to sell it is way more than that they sold their property for. But at the time, we were like, this is awesome. Another win when we took over the property, they had 98% occupancy. Part of it was because they were stuffing the property, but it's much better to start at 98% than at 88% or 85%. Parking is an issue, and it still remains an issue. We just don't have enough spots, and they're tight spots. But there aren't many good solutions for that. Their next door neighbor wouldn't let us park there. There's not street parking. It's just something that you have to deal with, quite honestly. Like I said, there was some credit unworthy tenants, and then COVID. We had some transients coming on our property, so we had up security on the property. There was a number that people can call when there was an issue, and we also had some security patrol as well on the property for, I would say, probably like the first 6 months of COVID, when we were getting transients on that property. And every once in a while, we still have that issue. You're going to have that with C-class properties, but that was definitely a challenge, and we stayed on top of it and addressed the issue anytime it happened, so that we're keeping our current residents happy in the place and making them feel safe and secure. Because if we weren't doing that, if we weren't super proactive, they're going to leave, and then we'll have more turnover. That's going to cost us more money. We have to spend time and money getting, looking for new residents, and we don't want to be wasting time and money on that. We want to keeping the residents we already have, assuming that they're good residents, they pay on time. All right, so this was our renovation in the very beginning, and we did the backsplash, the nice shakers, stainless steel. We actually toned this down. We stopped doing the backsplash. We were looking for ways to not spend as much money. We also installed washer dryers and the units, and talking about being proactive, it took several months to get that permit. We actually started that permit process before we took over, because we knew it would take some time, and they kind of changed it on us. But once we got through there, then we were able to start doing a lot of washer dryers, and we get like a $75 rent bump for the washer dryers. So we like to implement washer dryers on our 2 bedrooms on our properties. Typically don't do it on the 1 bedrooms. If you're in a B-class community, then it's worth it to do it on the B-class. You also want to make sure you have enough power. In the unit, you might need to change out your electrical panel. That could be $1,000 if you don't have enough power. And then for us, we were working with asset living, so we were able to get countertops, granite countertops, for the same price as Formica. So if you have a lot of buying power, you can get nicer, fixtures and stuff like that. So be aware of who you're hiring for your renovation. Oh, we changed out our leasing office. Actually, I don't have the before pictures, but much more colorful, much more inviting. And that's your first impression. The exterior of the property, and then obviously the leasing office. On the right here, this picture, there used to be a desk right here. As soon as you walked in, there was a fire alarm panel right behind it. So this picture is literally right over the fire panel, so you don't see it. So little things that make it, much more inviting. And we put in computers in here. You can't see them now. I think we took the picture just as they finished, so you're not going to see it. But computers for the residents to use as well. So it doesn't cost a lot of money. Nice little amenities. It's like a gym, that no one really uses, but it's nice to say you've got a gym. So we took out all that shrubbery in the front, much more colorful signage, changed the name. I feel it's a hipper name. Put these giant on the right, this banner, you can't really tell the size of it, but I think it's like 10 by 15, these massive banners, two of them, one on each building that you can see from the main road. So that goes a long way. I don't have to spend $500 a month, trying to market it on all these different websites. I can have the banner, and that can drive a lot of traffic to the site. So here is our pro forma rents and what our current rents are. So really a big jump in a short period of time. And really, we've gotten this jump in the last 6 months. I mean, in the beginning, we were, struggling when COVID hit and pushing, getting our occupancy up. We were getting rid of some bad tenants, but, obviously there wasn't a lot of traffic. But we were staying on top of our property management company and doing all the things that we needed to do so that once things kind of heated up again with traffic, we were able to really seize upon that and take advantage of that. So then the question is, okay, why sell? We're doing well now. Why would you sell? It'll sell under 2 years. And at one point we came up with a number of what we needed to sell it at, and we threw it out. We did a BOV with our broker, and we debated, all the GPs, and we said if we got to this number, we would sell. And we have a prepayment penalty, really sizable, just like most people do. They didn't do the floating debt, Freddie floater, or some of the debt funds that that are out there. But at the time, a lot of the gurus were saying long-term financing, don't worry about the prepayment penalty now. And so we paid a price. I mean, that's going to cost us $2.5–3 million on the sale price. But we ended up getting such a really high number for this deal that we thought, take the gains now. Don't assume that we'll still be able to get it, a year or two from now, and we'll still get it. But how much more will the property appreciate? How much more NOI will we push in the next year or two? I don't know. I'm very bullish on the Phoenix and Tucson market, but after debating this for a few months with our broker and with our team, we thought, hey, we've done really well. Let's lock in, the money if we could. And so this will be, assuming everything goes through, and all signs point to that, because our seller has, like I said, almost $1 million of hard money at this point. This will be over 2x to our investors in under 2 years. So we more than exceeded our 5-year plan. So you take that, if we refied again, we'd had that prepayment penalty. So it didn't really make sense to refi. So we're locking in the profits for our investor, and hope to have another deal for them to put that money into it. So that was our thought process. I'm happy to answer any questions about any of this, along the way.
There is a question in the chat from Peter. It says, for the phone number that tenants could call if there was a security issue, where did the call go?
Yeah. So it was a security company that they call, and it's relatively cheap to have that call service. So we have it, I think, at all of our properties. The security, when they stop by, I think, let's say 3 times a night, I think that's like $1,000, somewhere around there. So that's a bit more expensive. It does help though, and have them come at random times so that there isn't a pattern, because tenants and transients, they're smart. When they see a certain pattern, they're gonna know that, oh, I can mess around between this time. So rotate that pattern. But yeah, if we had if there was an issue, someone could call, and then they would send someone too. So that's a very inexpensive way to deal with a property that may have some issues as far as crime or transients.
I have one question for you. So in 2 years, exiting, and I just wanted to understand from you, is it the property has appreciated that much within 2 years? Is it like something you guys did, or is just a market trend?
So I think it's a combination. Obviously, market rate compression. So we picked a really good market. We picked a really good area. So our reversion cap was 5.75%, I believe. And we're selling this on a T3 at 3.75%. So huge difference right there. But also the way we manage the property. There are, we could have fallen, if we weren't staying on top of it, under 80% occupancy, collections were an issue. We actually fired our regional manager and our property manager. So our property manager would sometimes say things got done and they didn't get done. And the reason why we know they didn't get done is because we did spot checks. So we'd go there and she said, oh, well, the sign is up in the playground area, or we finished that unit, and we'd walk every single unit that was under renovation. We'd walk the property unannounced at times. We'd come in at night. And so we were able to see things that she had promised. And, if there was a legitimate excuse and you told us about it, then we can work through that. But when someone lies about it, that's not good. And so we decided to make a change there. And then with our regional manager, really nice lady. And quite honestly, we were too slow in making a change. But she wasn't as technologically savvy as we wanted her to be. We're very progressive. We want to study all the KPIs. We want to analyze every aspect of the operations with data, and that wasn't her forte. She was more old school and resisted a lot of the ideas that we suggested. So what we did was we had lunch with the owner of the property management company, and I think they managed like 10,000, but we never felt like a number. We had lunch and we weren't demanding a change, but we discussed, as we continue to grow, what the type of regional manager of what we're looking for, what we want to achieve long term. And he understood and immediately found someone that was a better fit for us and made the change. And once we changed the property manager and the regional manager, it was a huge difference. And quite like I said, we should have made the change earlier. We were a little resistant to do that, and because change is always hard, and you want to trust the people that are working with you. But my lesson for you guys is, don't hesitate if it's not working out. If you set the expectations up from the beginning and you hold them accountable and they're still not doing it, then make the change, and hopefully it's much better. And if it's not, then maybe that property management company isn't right for you.
Great. There's another question in the chat. What was the cash on cash return from CP?
The cash on cash return. So we estimated, I think it was 8% a year. So typically in our deals, we don't do anything in the first 6 months because it's a value add play. You'll start seeing it on the 7th month, and so the first year, it's going to be relatively smaller. And then the second year, I think we got up to 8%. We had it was for this deal was a 70-30 split, 8% cash on cash, and I think a 7 or 8% pref.
Right. I have another question for you. You mentioned that there was some changes that you made, the demographic changes, because there were some bad characters. So would you share with us what measures did you take to change the demographics? Was it easy? Was it hard?
Oh, it's never easy to get out some of the bad tenants. Particularly during COVID, but it certainly, if they're doing anything unlawful, you have a better chance to do that. You want to minimize your Section 8. There's plenty of really good residents that are Section 8, but by raising your rent, it becomes, do they make enough? Do they get enough from Section 8 to warrant them being able to stay there? So, one of our other properties, when we took over, we had like 50% Section 8, which is way too much. If you're trying to improve your tenant base and improve your rents, you don't want more than really 5%. So you've got to wean off of that. You obviously want to keep your occupancy high, and particularly during COVID, that was good income to have that. You knew they were getting paid to stay there, so that's worthwhile. But it's that fine line between who's causing trouble and whatnot, and it may be non-Section 8 people that are causing trouble too. I don't want to say, hey, they're all troublemakers, because that's not the case. But if someone's causing an issue, then yeah, you wanna try to get them out as soon as possible, and because you want to have your residents feel like it's a safe place, and obviously you want to support your full-time staff that are there, because sometimes, we've had some hairy situations with residents, and that's not a kind of environment that you want to have for your staff. So you want to make sure you support them and do everything you can to get a bad resident out.
So, but what percentage was that you changed the demographics? Was like how many people you had to evict and just get them?
Yeah, I would say about 20%.
20%.
And we're most of them are out. We still have like a few more that will be getting out. And each time there was like a celebration by our property manager, like, hey, we got this person out, and you want to celebrate those wins. It's really important. One of the things I didn't mention is it's a funny story, and I think Trevor's heard this before. So she was a Chiefs fan, and my business partner was a Raiders fan, and so we were joking, one day, if she got to 100% pre-leased, we'd make him wear a Chiefs jersey. And it was a funny banter back and forth each week about it, and eventually she did get it. So when we visited, she had a Chiefs jersey ready for him, and we took a picture, and she's grinning ear to ear, and no amount of money can make her like that happy. And so it didn't really cost as much. We did get her like a $200 gift certificate, and we've had other incentives for her as well. But find ways to kind of like make it fun, for your staff, because they're working really hard for you, and so you want to make sure money's not the only incentive. And Daniel Pink has a really good book about that. Forget what it's called, but it's about motivating staff, and you've got to find out what makes them tick, and they'll go that extra mile for you, and that could be the difference. On a even a few percentage points on your occupancy could be $500,000 when you go to sell the property because of that extra income. You're able to raise the rents, you get additional renters. So you've got to like find ways to motivate them and keep pushing all these improvements. It's that constant improvement cycle, so that your NOI is going up every single month.
Wow, that's great. Yeah, I agree with you 100% that you should always incentivize people, because they need to feel important too or the validation, whatever they are doing. And other question I wanted to ask you, this is again a question that comes to my mind all the time. You said this property is in the C area, it's a C class in the C area. Is that correct?
Yeah, and I think within a couple of years it will probably be in a B minus area. As is that path of progress. Obviously brokers are always going to sell you on that, but we know there's a nice neighborhood, north of the property, and there's some B class property. So we knew that it would be eventually coming to that area, and with that new charter school, which is really nice, and our residents can go to there. We're not there yet, but I would say in the next few years, and Phoenix continues to grow, and there's tremendous rent growth this past year in Phoenix, and we were able to ride that.
Yeah, so question was like for the C property in the C neighborhood, a lot of times I heard operators saying, you should do certain type of interiors, or maybe this property is not a good idea to do on this property because it's a C neighborhood, because you can raise the rent, or you can have the certain type of demographic graphics for that. It's not gonna be 100% applicable. But looking at the interiors that you guys did, that's pretty awesome. So is it like you guys had in mind that the area is gonna develop someday, maybe some gentrification or something? What was that
Yeah,
going on?
in certain areas, it's, I think in Texas, you can do some really inexpensive renovations. Tucson as well, we can do some really inexpensive. Phoenix, it costs a little bit more on the renovation side. And maybe it was just a bunch of people over improving. I thought we were over improving in the beginning as well, and we toned it down. So it's that fine line. I think what's really important is the exterior, a very welcoming exterior, because that's that first impression, and particularly when they have visitors too. So I would focus and make sure you have a really good exterior first, and then the interior you can improve. But yes, be very wary of over improving, and I think that's what we were doing in the beginning. And stainless steel, like, it shows, stains and not stains, but like fingerprints, and I think black, you could probably get away with black on C and B class properties for the most part. You don't necessarily need to go stainless steel. But sometimes your property management company can get, or whoever you're using for renovations, they can get pretty much the stainless steel for the cost of black. So it all depends on the cost of goods as well. Like, we were getting granite for the price of Formica, so that's why we did the granite countertops. But if you could, paint your cabinets, or sometimes you do like just shaker fronts, if it's a good quality cabinets, then go that route. So definitely be wary of over.
Great, thank you. If anybody has any questions, please unmute yourself and ask. This is your time.
Yeah, I have a question. How much of a increase in value does a play park or a dog park bring to a property like this?
Sorry, how much is a what?
How much of an increase in value does a play park or a dog park bring to a property like this?
So we created a dog park, but it's kind of a joke. It's not a nice dog park, and our property manager didn't want us to like do too much with it, because she's like, some of the residents are just not, like, the kids are hanging out there, and it's just not going to be good. This is like I said, a very dense community. I think dog parks are well worth it. You can do something, for $10,000. So fairly cheap, and residents love that. At one of our properties, it was a 42 unit. We couldn't even put a fence around it. We had this tiny area, so we just put some turf down, a sign, and some benches, and just some doggy bags. So I think it cost us like $1,500, but you could sell it as an amenity. So I think you won't necessarily see the rent, but it's like that gym too. Like, it doesn't have to be nice, but and most people don't use it, but knowing that it's there, I think, is a good selling point. And so many people love their pets. If you have a pretty sizable property, you should definitely have a dog park.
Great. Anybody else has any questions? Please unmute yourself.
Hey, Gary, do you have any questions on any tips on writing a book?
Sorry, who asked that?
Hey, Gary, I'm Colm.
All right, hey, Colm. It's a process.
Actually,
And
on the production, on the publishing side, that's where the question is related to. I mean,
Oh,
creating the
okay,
content
yeah.
and the skeleton is when you're motivated about something, you can spill your heart out. But really, when it comes to getting it out there, that's where the question's at.
Yeah, so I could recommend our publisher. We worked with a company called Scribe, and they kind of walked us through the whole process, which made it nice. So they did the editing, they did the book cover, they set up all like the links on Amazon and whatnot, and helped us get make it an Amazon bestseller. Certainly, we had our email list and everything, but there's things that you can do to make sure that it's an easier process. So yeah, I can connect you. I think we paid like $10,000 for it. You could spend more money and they could do more things for you. I think you might be able to spend a little less. That kind of fit for what we needed, and it's well worth it for us. Because they walked us through every step of the way. They really helped us.
For sure. Thank you. Yeah, I'll reach out to you individually on that. Yeah.
Yeah, I'll connect you with them, and yeah, I definitely recommend if you're going to write a book, just having someone walk you through all the steps is really nice, really helpful.
Yeah, I just spent the last 2 years with Grow Capitalist talking about 4,000 investors, and I think there's a lot of value to that people would appreciate hearing.
Yeah, absolutely.
So isn't that like Amazon has something like you don't even have to print so many copies day one? You can print as you go.
Yeah. Yeah, we set them up with everything, and they'll print. We also did something else where we use it as like a lead magnet. So it's another site. So someone could order the book for free, basically, and they pay for shipping, which covers the cost of the book. And then they kind of go through a sales funnel and whatnot. So you can buy it directly from Amazon, or you can kind of go through our sales funnel, and we'll upsell you on some other things. So there's a lot of different ways to go. And what we did is we focused on the Kindle when we came out with the book. So we lowered it to 99 cents. So we were able to hit our number, bestseller, boom, and you can say that for the rest of your life.
That's fantastic. Has it facilitated with the podcast conversations? Because you go in there not only with your experience, but with a specific piece of value that's kind of the gateway to your book.
Yeah. It all, between the podcast, the summit, and the book, and it all, feeds off each other. And quite honestly, the book pushed us to be better operators, having to put it all down on paper and really think through how we're doing things. And so it forced us, if a system wasn't good, if we couldn't explain it well enough, then hey, we need to figure out how to do it better. So it was a long process. It took almost a year and a half. The editing is back and forth, and you're like, I don't want to read this friggin' book anymore. But it was it just it's a great accomplishment when you finish it, and I'm a better operator because of it, by having to put it on paper.
And he's famous. People like me chase him down to take pictures with him now. It's an awesome book. And I did chase him down and take a picture with him.
I appreciate you, Trevor. Thank you.
Hi, Gary. Vicky. I had a question. Happy Friday to everybody. Mine was you mentioned having to fire a property management company. I'm curious to know, what are some questions that you ask now of property managers as you're interviewing them that maybe you weren't asking before, after having gone through that experience?
Yeah, so we didn't fire our property management company. We fired our property manager and our regional manager. We like the company, although they're not perfect, and no one is. It's a thankless job, low margins. They're working on a lot of different things, so you really have to hold them accountable. You know, it's they're not the owners of the property, you are, so you really got to stay on top of it. But when we're searching for property management companies, you know, you really have to spend a lot of time and have them do some pro formas for you, because you could tell right away if they're just mailing it in a pro forma and not really giving you detailed. And I quite honestly, I've struggled on a property that I was putting an offer in, and they sent me recently a pro forma that I just wasn't happy with. I thought that they didn't have that attention to detail that I expected of them and wanted, because if I'm going to buy a $30 million property, I want to make sure everything is dialed in. And I did my own comps, and I walked all the properties, but they weren't offering me anything else that I didn't know. And I wanted them to have more insight than I had. I thought I knew the market really well, but I still wanted them to have that higher insight. And quite honestly, that frustrated me recently. I know I kind of went aside, but did I answer that question? I can delve deeper into that as well.
Yeah, somewhat. I was curious if there's any questions, maybe like very specific questions that you ask now that you wouldn't have before from having gone through that experience.
Yeah, you know, I want to understand their philosophy on how they manage people and hold them accountable. And everyone will give you the answers that you ask them. So you have to ask them in a certain way without leading them on. Because if I say, "Oh, you're technologically savvy," they'll all say, "Yeah, we are." But I want to know, okay, what are the tools that they use, and so that, you know, I'm not leading, I'm not giving them the answers. I want to know how they manage their property manager, and this is of the regional, and then of the property manager, I want to know the tools and tricks that they use as well. And that's really important. If they're not technologically savvy, then, you know, they're just not a good fit for me, because I want to keep testing and pushing and improving. And a lot of the property managers and regional managers just aren't used to that, particularly if they've been in the industry for a while. You know, they're going to be resistant to change. So I'm going to look at someone maybe a little bit more younger, a little bit more open to different ideas. And also, I want to hear their ideas too. I don't want to be a dictator. I want them to add value and to bring something to the table that I might not have thought of, and be proactive. And so I'm going to ask some questions about their proactiveness too, and maybe throw out some situations and say, "Hey, what would you do in this case?" And each property is a little bit different, but I want to see how they answer. But if they're going to be reactive versus proactive, then they're not a good fit for me as well.
Yeah, so it's knowing yourself and what you want. Cool, thank you.
Yeah. And that's when we sat down with the owner of the company, because we weren't necessarily looking to fire the regional manager at that point. You know, we hadn't made that big boy decision yet, but after talking to him and telling him what we were looking for, he knew he made that change for us. And because, you know, we're saying it wasn't just this property, but what we were looking for 3 years, 5 years down the road, of how we manage our own company and what we were looking for. And so he knew also, without having to say, "You need to fire this person," he knew, okay, this isn't a good fit. I know what these guys want, and immediately found the person that was a much better fit for us.
Awesome. Cool. Thanks, Gary.
I think that was really good. I think you guys were really, really top on it. You know, you were like not waiting for the reports just from the property management. You were just like really working on top of that and trying to figure out what's going on. I think, which is really great. And I think Claire has a question. I'm sorry, go ahead.
Yeah, and there's a fine line between like micromanaging, which you don't want to do. You want them to be part of that process. But it's also holding people accountable. And so we use a Google Drive, and for our weekly report, it's on Google so everyone can see it, but we also have a task list on there so everyone knows if who's got a task, when it's due by, and so you don't, when you come to the next meeting a week later, and if your name's on there and you haven't completed your task, you look kind of foolish. So it holds people accountable too, which is really nice. And if you forget something, you just go to that Google Doc we all have access to and get it done.
That's great.
Sorry, who had a question? Cordell.
Blair has a question.
Oh, Blair. All right.
Hey, Gary, appreciate listening in today. I came in a little bit late. I don't know if you said the title of your book, but I'd like to have that put into the chat. And then also, there you go,
Best in class.
Right on. And then do you talk about the tech needs in there? Because that's something I've been wrestling with, is how do we move towards, I'm working on trying to get tech to help manage higher density models like rooms for rent with a peer-to-peer support system where people are accountable for their actions. I don't want to talk too much about that, but I've been looking at work groups and some of the things that are available in Google because they provide a lot of structure there, but getting the summary of what you're going to do, when you're going to do it, who you're going to tell, and how is still a little bit clunky. So I'd love to have any ideas that you've been playing with if you are tech savvy, or things that have been working for you, because everybody's got sheets, everybody's got forms, everybody's got to-do lists, but I'm trying to figure out how to get my hands on something. So when I say, what are you going to do, when are you going to do it, who are you going to tell, and how, I can see it easily in a way that helps me manage my properties better. But I don't want to build or pay for a subscription that's really expensive for these, CRMs forced to do that work, so I'd love to hear your thoughts about that, just because you're talking a bit around that right now, and I'd love to have you flesh that out if that's possible.
Yeah, and I'm like technologically, somewhere in the middle of the road, but
yeah,
the
right
more
on.
I use it, the better off I like it. We use Trello boards, which are free too, and so that's a good way for our renovations and task lists as well. So you can move it from a to-do list to working on to finish. So really easy, everyone can see. What we've been using the last few months too is Monday.com, which we feel is better than Trello, and it does some of the same things, and it has that CRM piece as well. It has a lot of different pieces. So we've really liked Monday.com, and we're either free or very small fee. So well worth it. And we were able to put some maps on of properties that we've looked at, and a lot of different cool things that we're still taking, learning all the different things, but that's pretty a robust one as well.
Yeah, that's cool. I'm looking for a Google/Flutter rock star that can help me gather these APIs and get my hands on it. Because if I could do that, I could help small businesses as well as what I want to do in the markets I'm interested in.
Try Upwork and see if you can find someone that's,
I've done
it's hit and miss.
Yeah, exactly. I hired a guy out of Bangladesh. We spent some time. I hired some guys out of India. You know what I mean? They fleshed out some of the wireframes a bit, but still getting it so it's connected to the larger system, which is Google's APIs and their structure, which is fairly intense. I haven't found that rock star yet, but I don't want to derail it. That's great that you're using those tools, and I appreciate your the book title and all that too. So thanks.
Have you tried integrating through Zapier for the automations?
Yes, Zapier is something I'm working with there. I've just been trying to find somebody that's good with Zapier, because Zapier again is asking for how many Zaps you have, how many APIs you want, and it's like, I want to get it, and this is just me, I want to get it for just the Google APIs and get those really well dialed in, because then if I can make it free to people, then I could do recovery houses and elder care and a couple places where we're renting rooms for rent, but we're holding people accountable in a way that I think will make them more profitable and better to live in. So it's something I've been trying to get my hands wrapped on. So love to talk to you, Colm, if that's something you're playing with or interested in, because that's kind of what I'm going after. Anyways, blah, blah, blah. Pleasure listening to you. Right on.
Thank you. Appreciate it.
Yeah.
Cordell, did you have a question?
Yes, sir.
All right.
Read your book. Great book. Actually, I'm looking at my notes. I have 8 pages of notes. I use it
wow.
on Google. Yeah, so I have a method where I read it on my phone. I take screenshots and then I go back to my Google Docs and make bullets. So well, 2 things. One is like when you have your KPIs, you work with your property manager. Not every property manager uses the same software. So how do you keep track of all the stuff? I know that you got, I see Colm was on there. I met Colm before in person. You got an idea from Neil Bawa about the lasso, leads, appointments, and all that stuff. So little things like for KPIs, do you have to manually transcribe what they give you, or do they figure, how does that work? And then my second question is, what advice can you give for lease audits during the acquisition phase?
Yep. So, so what we did is we used RealPage and built out that system. I think it was like 5,000, and it may be different now. And that connects with our property management software. And we pay $1 per unit per month. So for 128 unit property, we pay $128. Gives us a ton of information. We think it's well worth it. And so that pulls all the data from Yardi to RealPage and provides all the information in a very easily digestible format, and we can manipulate it and do different things with it. So we're not just looking at total occupancy. We can break it down into occupancy per unit type, because if our occupancy could be 95%, and so that's pretty good, but it might be 1 or 2 unit types that are doing really bad, and that's where we need to maybe lower the rent a little bit. But all the other units, we can raise the rent. So we're just we could figure out what's doing well, what's not doing well, and breaking down. Neil is great at that, as far as breaking down every single task. And that's what we want to do, measuring all these different things so we can make better decisions. And then your other question was, remind me?
Lease audits. What advice can you give on lease audits?
Yeah. So when we do the lease audits, I'm not doing it, quite honestly. So we go in with our property management company, and they're doing all the lease audits. Depending upon the size of the property, I think on this one there might have been 3 or 4 people doing the lease audit. So we knew going in that some of the residents, were stuffed, and they couldn't, they maybe had income that was twice for the monthly rent, where you want to have 2.5 to maybe even 3 times per month. And we knew that going in, and we weren't going to kill the deal because of that. But whether it's your property management company that's doing the inspection, or you hire another company, let them go through it. They'll have all these different checklists. Is the lease there? All these different things, because we took over a property end of February, and the property management company was awful. The property manager had 0 support, 0 training. Half the leases weren't in there. Once we took over the property, we're finding out like she had like a birthday month, and if it was your birthday month, like you didn't have to pay rent. And we're like, what? This isn't like a Sunday on your birthday, like. So I think one of them was in writing, maybe 2, and then the rest weren't in writing. So we're like, no, you got to have this in writing. And so we dealt with it. I mean, but just like crazy things that we uncovered. The paperwork was a mess, and again, we knew this going in, but keep clean files and make sure everything is in there, because eventually you're going to have to pay the price of however messy it is.
Thank you.
Sure. What other questions you guys have?
I think Rosamond has a question. She's, you want to unmute yourself, Rosamond, and ask your question, if I said her name right?
Yeah, you're right. Yeah, I just wanted to ask, because I'm thinking to start my first syndication one. So I just wanted to see if we have a already investor, if you want to present some kind of business plan. So do you have any kind of sample for business plans which we can present them?
For, you mean like an investment summary or more of like a business plan for that particular property?
Business plan for the particular property.
Yeah, I mean, it's each property is different. And so I mean, it doesn't have to be fancy. I think, people focus on, on being, fancy or whatnot, but having a well thought out plan and one that is well researched and that your property management company, most importantly, is on board with, that's really, really key. If you have a business plan and you haven't talked about it with your property management company and they don't think you can execute it, that's a real problem. So you want to make sure that they're on board and they agree and they feel like you can do everything that you say you're going to do. And they might have some ideas as well. So you want to involve them in the process. But as a sample, what I would do is look at other people's investment summaries that they have for their properties and get ideas of what people are doing. Get on a lot of people's lists. That'll give you some ideas on how they're underwriting and what kind of packages they're putting together. That would be my suggestion.
Sure. Thank you.